Are softer commodity prices impacting the used machinery market yet? The House Ag Committee begins markup on the Farm Bill this Thursday, and biofuels groups push for details on the 45Z tax subsidies for sustainable aviation fuel.
Live with a sneaking summertime suspicion via Farm Journal Studios, this is AgriTalk. This morning we'll begin with a conversation with Machinery Pete, that's Greg Peterson. Then it's Dr. Mary Kay Thatcher from Syngenta. And later, Kurt Kovarik from Clean Fuels Alliance America. Directly following the news, Kirk Hins from BAM WX with a weather update. I'm the handsome newsman Davis Michelson. And now, filling in for Chip, Michelle Rook. Good morning, Michelle.
Hey, good morning, Davis. How you doing this Monday morning?
I got to tell you, I encountered my first brush with 90-degree weather over the weekend. I had to travel south to get there, but I'm telling you, a sneaking summertime suspicion is feeling a little warm outside right now. Here in the city of Kansas, 73 and a blazing sunshine. What's it look like out your window, Michelle?
Well, we do have sunshine, but, we did get some more rain over the weekend up here in the Dakotas, and so... boy, it's been hit and miss trying to get in there and get the last of the corn planted. And so planting delays ensue here.
Indeed.
The heat affected me, I'm afraid to admit. Apparently, I put the wrong name for today's BAM WX weather person. It is not Kirk.
It's not Kirk?
No, it's Brett Waltz.
Well, Brett Waltz is great.
Yes,
I have no problem. Michelle, are you good with that? Can we do that?
Yeah, I was just going to message and say, hey, am I on the wrong page here?
No, I'm the wrong.
I'm on the wrong page.
It's
if there's
Monday,
a wrong page
man.
to be on, I'll find it. Big Apple Joe, everybody, getting us back
easy.
on the rails.
Easy to give you a pass on a Monday there, so.
I know, he let me off easy.
Yeah, so we got a big week, it sounds like, in terms of House Ag Committee and markup on the Farm Bill, so we're going to be talking about that today.
Yeah, for sure. And I'm anxious to hear from Dr. Thatcher from Syngenta. They've got some interesting stuff there. And Kurt Kovarik is always great. And I'll tell you, Michelle, I'm trying to keep it all straight. Biofuel policy with the ethanol, with the SAF and everything.
Yeah,
I need some perspective from Kurt.
45Z. Yeah, I think I'm just mildly confused, but Kurt knows all about that. So
I'm losing my grip. We need help, don't we?
Yeah, we do. Well, just kick us off here in the news, and we'll get into the details.
Yeah, we'll start with the National Weather Service weather outlook. They're calling for continued severe weather and excessive rainfall threats over the central U.S. clear into midweek this week. Cool conditions with periods of showers and storm chances from the Rockies to the Pacific Northwest. Well above average summer-like temperatures to start the week across much of the central and eastern United States. The unofficial start to summer shows up. It's this weekend already, isn't it, Michelle?
Yeah, I believe it's coming up here, and maybe some more severe weather to start off the week, too. We'll talk about that with Brett coming up.
Well, for the first time in 2 years, a uniform set of data reports is suggesting that restrictive monetary policy may be starting to bite. This according to Dr. Vince Malanga, president of LaSalle Economics. He notes April saw a decline in consumer sentiment, rising credit delinquency rates, and a falling household savings rate. Both manufacturing and services fell into contraction, with service industry employment weakening alongside prolonged goods industry employment weakness. While the economy is not officially in decline, Malanga says April's weakness could signal the onset of stagflation.
All right, well, tell the stock market that then.
Stock market didn't seem to get the memo. Yeah.
Nope, it hasn't been anyways.
Well, President Biden's decision to raise tariffs on selected goods from China, impacting roughly $18 billion worth of imports, is expected to stir conflict within supply chains over who will bear the cost. This move has significant implications for the U.S. economy and inflation. Evidence indicates that the tariffs initially imposed by then President Trump and later maintained by now President Biden were largely absorbed by American buyers. Of course, here's the consumer ponying up the bill, Michelle.
That's how it usually works. We did not get tariffs on used cooking oil. We're going to talk to Kurt about that a little bit coming up, too.
Good one. Well, Lai Ching-te has been sworn in as Taiwan's new president, asserting that the democratic island will not be influenced by, quote, external forces. and will maintain the status quo with China. He also called for peace across the Taiwan Strait. However, Beijing views Lai as a separatist and may increase incursions across the strait in response. Have to wait and see how this one shakes out.
Yeah.
Two of the world's most traded metals reached record highs as commodity markets gained attention. Copper soared past $11,000 per ton, marking its highest level ever. Meanwhile, gold also hit a record high following the death of Iranian President Ibrahim Raisi in a helicopter crash, which heightened concerns about potential new tensions in the Middle East, driving investors to the safe haven metal. As I understand it, the word from the Iranian press is they're blaming the weather for this tragic crash that killed President Raisi and Iran's foreign minister. Man, their government certainly took a hit here in the upper echelon.
But
whatever
no
the
foul
cause
play,
might be.
huh?
So far, they're not saying so. And I gotta say, if they were suspecting foul play, I'm feeling like we would hear all about it.
True.
So I don't know. Orange juice prices have reached record highs due to heat and disease damaging crops in Brazil. They're the leading exporter, and they account for about 70% of global supply. America's sugar beet and sugar cane farm families and factory workers are praising the strong farm safety net included in the House Farm Bill. They highlighted the challenges faced by farmers, including high production costs, rising foreign subsidies, predatory trade practices, and adverse weather conditions. The newly released Farm Bill, led by Chairman G.T. Thompson, addresses these issues by providing a robust safety net. Michelle, let's get over to the weather.
Yeah. Sugar beet, I'm glad they're glad for the Farm Bill, because it looks like some of the other groups, Democrats, have already piled on to criticize. Yeah. So you're right. Let's talk about the weather. Brett Waltz joins us with BAM-WX, and it sounds like we're going to kick off the week here, Brett, with some more severe weather.
Yeah, hey, good morning. It is going to continue to be busy over the next 3 days. More than 300 severe weather reports yesterday in the Central Plains, and more severe weather tonight. And then I'm especially concerned about tomorrow across parts of the Midwest, including much of Iowa, for several tornadoes and perhaps some very large hail as well.
No doubt. Also, talk about the pattern beyond that, because, the grain markets have been trying to put in a little bit of weather premium with some of these concerns about planting delays. Do we get any relief or break for that?
Yeah, especially the next 7 days, but to be completely honest, all the way into next week, I'm just concerned about extended dry time. We might get 2 or 3 days here and there across the middle of the country, but you also have to keep in mind that with many areas picking up 1 to 2 inches plus the next 7 days, fields are going to be wet. I think it's going to continue to be a challenge over the next couple of weeks.
Yeah, no doubt. What about farther out? We've got some of these extended forecasts, maybe talking about it turning back warmer and drier for July and August?
Yeah, I think into the extended range, I'm most concerned about maybe late July and into August in terms of maybe getting a little bit drier. I think the big kicker is going to be hurricane season and how quick that ramps up, because oftentimes when we get a lot of tropical activity in the Gulf of Mexico, it tends to make us hotter and drier in the middle part of the country. I do think that is something we need to watch. But before then, I think that we remain pretty active into June and early July.
Okay, well, let's hope we get the crop planted on time here and we get things off to a good start if that does happen. All right, thanks, Brett. Brett Waltz joining us with BAM-WX. When we return, our weekly visit with Machinery Pete on upcoming sales he's watching this week, as well as the used machinery trends. We'll have more on AgriTalk coming up.
Machinery Pete here, folks. This segment of AgriTalk brought to you by our friends at Dakota Ag Innovations, makers of Dakota Shine, the best way I've seen to fix faded paint. Go to dakotashine.com or call 888-996-7801.
Welcome back to AgriTalk. I'm Michelle Rook, filling in for Chip this morning, and joining us Monday morning, Greg Peterson, Machinery Pete, and good to have you along, Greg. Is the auction season just a little slower this time of year with guys in the fields planting?
Yeah, end of May always slows down, Michelle. Coming off a busy March has always been, I consider, the busiest month of the year, and April has actually become surprisingly busy throughout North America. But yeah, no doubt the volume of sales does slow this time of year.
Absolutely. So we always start off with your pick of the week. So kick us off.
Well, pick of the week is going to be somewhat of a similar trend over the last couple of years. It tends to fall this way, but what caught my eye here recently, Michelle, was a sale last Wednesday. Our friends at Big Iron, of course, weekly Wednesday online auction. They had a 2011 John Deere 9630 four-wheel drive out of Kansas, 5,055 hours on it, sold for $110,250. And I got looking in all of our auction price data at machinerypete.com. And of course, we have filters in there. You can play around with the search. And I said, show me the highest prices on 9630s with over 5,000 hours. And this 110,250 seemed pretty strong to me. And it actually is the sixth highest ever with over 5,000 hours. But what I found interesting, Michelle, is that so many of these highest 9630s with over 5,000 hours have come the last couple of years. And I think, interestingly, the highest ever was last July, which we maybe in a couple of years might look back and say that maybe was the peak for, maybe some of these pre-def tractors. But that was a sale that Steffes Group had up in Starkweather, North Dakota, July 19th of 23. They had an 11 model 9630, 5,234 hours that brought actually $170,000 with those kind of hours on it. But of course, pre-def, a lot of people have been, looking that way increasingly here the last couple of years.
Yeah, that's been a hot item. And of course, anything anybody can fix themselves, right?
Yep. That's true. The new stuff is awful expensive and, for a lot of good reasons, whatever. But, yeah, people are, in fact, I was just asked on Facebook the other day about this, Michelle. I had commented, and Chip and I talked last week about what we're seeing with softening auction prices on the high horse late model tractors. So the 1 and 2 year old ones, they're definitely coming down in value. So I posted a video that we did for Ag Day TV, and I got a good question on Facebook. Someone said, "Hey, Pete, are you seeing the same with pre-def tractors?" And I jumped in and replied and said, well, not really. The demand is still strong. I would maybe say the edge maybe is a little bit off, more so on like an average condition. Pre-def tractors, still the very, very nicest ones, still are attracting tons of buying interest, I'd say.
But still kind of a reflection of the softening of this commodity price environment?
A little bit. Like I say, that to me, when I looked at these 9630 prices, and I remembered that one Steffes sold last July for 170 up in North Dakota, and that's the highest by 25,000. The next highest one was back in end of 21 in Milford, Illinois. Of course, Maury Auction Company there. Everyone knows those guys do a great job. They sold one for 145, an 08 model with about 5,400 hours on it. But 170 to get that much above a record 25K back, about a year ago, that's the kind of heat we were seeing, extreme heat on these pre-def four-wheel drives. They're still solid. But again, this one last Wednesday brought 110 and a quarter. Very nice. So it's just, everything's recalibrating a little bit.
Yeah. I talked to Scott Steffes, and I know during the winter, he said too, some of that stuff was just crazy what it was bringing. And he was shaking his head a lot of days about that.
Well, you talked to Scott Steffes. That is a sharp dude. Hats off to Scott and what his family has built there with the Steffes Group. If you don't check out their website, folks, just do yourself a favor and visit regularly, because they have so many sales and they provide lots of great information. Scott writes a blog, and his son Max talking about land values. So they're great folks up there at the Steffes Group.
Absolutely. So you have a couple of auctions coming up, though. One in Minnesota this week.
Yeah, tomorrow, Tuesday, Redwood Falls, a sale by our friends at Kirchhoff Auction and Real Estate. Not a huge sale, just they call it the Redwood Area consignment sale. It's live and online bidding, and a couple items that caught my eye again. And Michelle, I don't always like to talk about the big, high, expensive stuff. A lot of things catch my eye. They have a sharp older combine, an International 1460. I think I'm guessing it's an 80 or 81 model. It's got the beautiful black striping on there. 4,256 hours. Great pictures of it at kirchhoffauction.com. And then for you green fans, they have a nice, solid looking John Deere 4440 quad range with 8,872 hours. So they won't be records by any means, but good, solid, older machines. And that That combine got me thinking, Michelle. I actually saw up in Michigan last week an older 70, I think it was a 74 model John Deere 3300, so really a throwback. But my friends at Meadema Auctioneering had one, and it was a nice unit, and it brought $3,300. So I thought that was pretty cool. A John Deere 3300 combine selling for $3,300.
Wow.
Symmetry.
Yeah. So you mentioned Michigan, and you have an auction coming up this Wednesday in Michigan as well.
Yeah, this Wednesday, good folks at Albrecht Auction Service. A lot of folks know their website. It's bidnow.us. Dave Albrecht and the crew there, they have their evening auction bi-monthly, and they got interesting items on the sale. They've got let's see, good condition hay equipment's been real strong. They got a 20 model Case IH RB 455 round baler with just under 3,200 bales through it, very clean. Tractors, they have an International 3588 2+2. Those always get people talking. This one boarded original condition under 3,800 hours. So that will be interesting. Bigger late model stuff. They got a 2016 Case IH Steiger 540 quad track, 3,027 hours, one owner. Got, I think, new Camso 3,500 tracks on it. And then a little on the smaller horsepower side, they've got a 2018 John Deere 5100M, mechanical front with a cab, 720 hours. So yeah, that should be an interesting sale. Again, the website is bidnow.us. And again, the sale's Wednesday, 6 p.m. Central is when the items start to close, Michelle.
Yeah, Greg, an evening online auction, is that becoming more common?
Yeah, it really is. I found this trend to be kind of fascinating the past 18 months or so, Michelle. I'm seeing it all over the country more and more often. I think initially, of course, the pandemic was a little plus 4+ years ago. We started to see a lot of auction companies shifted to the online only. Now, Albrecht, this is interesting. They've been at it longer. They're one of the first, along with Big Iron, to go strictly online only. But they've, I think, always kind of gone in the evening. And I know initially a lot of people were like, well, I don't like that. I'm used to like a 10 o'clock, 11 o'clock, whatever. But as I sit and analyze the prices that roll in, these evening auctions are very dynamic, and I think people are getting used to them now. And, I guess instead of sitting in front of the television watching reruns or the Food Network or whatever, you can, just have your computer screen open and have the 3 online auctions. You got your bids in on each of them to see how you're doing. So things are changing.
Yeah, crack a beer, and it's a nice evening of entertainment, right?
That is a good evening. Yes, absolutely. Especially with Memorial Day coming, and have a beverage and watch some online bidding.
Yeah, I know the online auctions have just been the rage here since the pandemic, but the evening ones are kind of an interesting twist on that. What about higher interest rates? How overall has that been impacting the machinery auction business, especially on the used side?
Well, great question, Michelle. I think the effect is starting to kick in now, kind of a delayed effect. And I was asked immediately when the interest rates, went higher. It's like, oh my gosh, this must be instantaneous. And really, I wasn't seeing any effect on the auction pricing. But now, a combination of factors. On the one hand, on the dealer lots, used lots, we, no doubt we're seeing a increase in inventory, especially on the higher horse, the bigger models. Combines was the first sector we saw. Now the high horse tractors, sprayers, planters. But as dealers shift their focus, of course, there's fewer larger dealers than years ago. These larger groups, they've really quickly pivoted, and I mean they'll still sell you the new, but I mean their head is on moving used. That it's pretty clear. So with these high interest rates, they know that one of the levers they can have available is, maybe some attractive financing offers, whether that's like a used combine, a used tractor, whatever, high horse, small horse. So I think we're seeing more of that now, and I think that's really we're going to see a lot more of that the rest of 2024. Okay. And then beyond that, as 24 plays out and dollars are tighter on the ag side, and we're getting this recalibration of used values and auction prices, I think, interest rate will become, just more to the fore of people's thinking when it comes to newer used equipment.
Great. How can folks get more information and catch up with you?
MachineryPete.com. That's probably the place you can find all the latest, I guess, Michelle.
Well, thanks for being with us. As always, Greg Peterson, Machinery Pete, and we'll have more AgriTalk coming up.
Time for Markets Now with the experts from Pro Farmer.
And joining us once again this morning, Brian Grady, editor of Pro Farmer. And Brian, grains all back higher here this morning. Wheat is kind of leading the pack here. Are we putting in some weather premium on some of these Black Sea crop concerns or Russian crop concerns?
Yeah, it's not only just the Black Sea region and Russia in particular, Michelle, but other areas around the world as well, including U.S. HRW areas. And so we had a very poor finish to the week last week, closed on weekly lows. And we got into a pattern where we saw overnight price strength and then selling during daytime trade. But that hasn't been the case here. We've actually extended the overnight gains during daytime trade so far this morning, and it'll be critical in terms of where we finish. But good, strong start to the week in the wheat market, and that's spilling over into corn as well, trading about 7 to 8 cents higher here at mid-morning. And the soy complex also working solidly to the upside with double-digit gains in soybeans, but also soy meal is strong, and soy oil is more than 100 points higher.
Yeah, we ran up into chart resistance last week, so that's going to be important to take out, isn't it?
Absolutely. So we've got the fundamental factors, the crop concerns, but we also have the technical factors that come into play. So both of them will work in conjunction or maybe work against each other. We'll have to see how that works out.
Speaking of charts, cattle had a nice week last week on the chart, sharply higher cash and cutouts. Are we going to be able to keep going there?
Well, that's the key. And you know, the futures are trading below the cash. And so that's given us some support here this morning in most of the contracts, but buyer interest is limited. They're waiting. They anticipate that it'll be a lengthy process in determining the cash market this week again. Feeders, because of the strength in corn, are under some pressure, and then kind of a mixed tone here at mid-morning in the hog market.
Yeah, we did some chart damage there last week. All right, thanks. Brian Grady, editor of Pro Farmer, joining us with markets.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Welcome back to AgriTalk. I'm Michelle Rook in for Chip Flory this morning. Well, we finally are getting some movement here on the Farm Bill. And on Friday, the House released its text and some other information regarding its 942-page bill. It's already looking like it's being criticized by some of the Democrats as it starts moving into markup this week. And here to visit about that, Kay Thatcher, Senior Manager for Federal Government and Industry Relations for Syngenta. Thanks for being with us, Kay.
You bet, Michelle.
All right. So like I said, we're finally getting movement here on the House side of the Farm Bill. What's your take so far on what you've seen?
Well, everybody's happy it's moving forward. I mean, you know, for political junkies, this is a week that only happens every 5 or 6 years. So it's pretty exciting. But, you know, I think it's really important for Mr. Thompson to move forward on something really down in the weeds. But the Congressional Budget Office that scores kind of how much different provisions will cost is still able at this point in time, if we get the bill through the committee by the end of May, to use the old what they call the baseline, the amount of money we're going to have to spend. But pretty soon we're going to get the new baseline out, and that would require them probably more money to be able to write the same kind of farm bill, and certainly more time to go back and have the Congressional Budget Office, quote, score how much does each provision cost. And as you said, it's a 900-page bill, so that takes a while. So if we're going to move the farm bill, it's certainly important that we take this first step. I think it's anybody's guess at this point, Michelle, about, you know, most likely it will pass out of the committee in a partisan way on Thursday. But I think people haven't yet been up hope on, are there 3 or 4 moderate Democrats in very heavy agricultural districts that just need to vote for a farm bill, even if the Democratic leadership is saying, no, don't vote for a Republican drafted bill.
Yeah. What you had said, though, about House Ag Committee Chairman G.T. Thompson trying to move this right now, the timing is imperative here just because of the whole budget issue. Just how imperative is that?
Very imperative, because it just takes the Congressional Budget Office so long to do this. And that's not meant to be critical, although I think they have been probably slower in the last year than in previous times. But when you think about scoring every rural development provision that comes along, or, especially when I think about new reference prices, or what about bringing base acres into production, or what about crop insurance premium subsidies, they have to rethink their whole number structure, and that just is going to take forever. So we have to move it through now. I think it's, iffy that we could move a Republican only passed bill out of the House Ag Committee through the House floor. We just don't have, it's such a tight margin there that I don't know that will happen. But maybe at least if we move it forward, we capture the amount of money that it's going to cost. And then we figure out, how to take the following steps. But we are hearing that maybe the Congressional Budget Office has a little different viewpoint on the amount that would be saved from not allowing the secretary to have as much flexibility to use CCC funding. So, that's likely to be an issue by the end of the week, too. So many things up in the air, and most of them tied to the cost of the different provisions in the bill.
Right. I was going to ask you about that. So they're going to alter Section 5 of the CCC in order to get enough money. Is that how that works?
So Mr. Thompson believes that they can get about $50 billion out of limiting what the secretary can do with CCC funds. We've had a discretionary fund down at USDA, CCC, that secretaries have used forever, but it's often been, oh gosh, the peach market is in a bad way. Let's buy more peaches for the school lunch. Secretary Vilsack has used this fund to make up for things, especially like the China tit-for-tat trade war and COVID assistance, et cetera, which has been quite beneficial to farmers. But Congress obviously believes that spending dollars like that is more in their purview, and that USDA shouldn't just have the ability to do that. So, the Democrats generally think that about a Republican administration. The Republicans think it about a Democratic administration. And what Mr. Thompson, as chairman, has been trying to do is to capture that money. But now there are, I think, different viewpoints on, can he really capture 50 billion, or is it as little as maybe 5 to 10 billion? If it's as small as 5 to 10 billion, then we can't go in and raise reference prices and raise premium subsidies on crop insurance the way we see in the text of the bill right now.
All right. So you said you think it'll move through a markup and be passed through the committee, but it was pretty much criticized here by Ranking Member Scott, and Senate Ag Committee Chair Debbie Stabenow is already kind of criticizing as well. Is that just kind of to be expected, or?
Well, and there was a big meeting, somewhat unprecedented. I would say I certainly don't remember it in my time of ever having a senator come over and meet with the chairman of the Senate Ag Committee, come over and meet with members of the Ag Committee with Hakeem Jeffries, the speaker, or the minority leader of the House, and say, hey, don't pass a Republican farm bill. We're going to come out with Debbie Stabenow has a Democratic provision. We haven't seen the text, but we've seen pretty detailed instructions about what she plans. Wait and support this. This is better. And, it all goes back, a large portion of it goes back to SNAP, the old food stamp program. Do we want to make any changes to that? The Democrats are staying pretty resolute. No, the Republicans are saying not cuts, but let's make sure that we can't have future administrations going in and having quite as much flexibility as this one did. And then, of course, Debbie Stabenow personally feeling really strongly about her provisions to move $13-14 billion in conservation funding, but have it only go for climate smart agriculture purposes. Right. And most Republicans would say, hey, having all or most of it for conservation programs is a good thing, but we want to have it open for all conservation programs, not just climate smart ag programs.
But as I look at the key differences now between the House and the Senate versions, the House versions have things that a lot of the commodity groups have asked for: higher reference prices, increases in ARC coverage, expanding base acreage, right?
Absolutely. Yes. I mean, I think you would have to look at it and say, especially Title I, Title II are going to be more friendly to farmers. Title 11, the crop insurance and the commodity provisions. But again, keep in mind, I don't know that I've seen a final score on Debbie Stabenow's bill, but it's going to be, I suspect, more in the $5 to $10 billion range. And what you're looking at under the House bill is thinking more of a $50 or $60 billion in new funding. So the bills are going to look very different when we finally figure out what is the score that CBO is going to give them.
Yeah, it always comes down to the money. I understand that.
It sure does.
Yeah. What other differences do you see right now between the House and the Senate versions that you think are good or bad?
Well, certainly, I think agriculture ought to feel really positive about the provision in Mr. Thompson's bill on being able to overturn Prop 12, the provision out in California, making pork production pretty difficult to get it approved out there. There is no such provision in the Senate side. I think that's a big issue. That's very precedent setting. I mean, it's not just pork. Obviously, there are other livestock sectors that are affected. And I think it's precedent setting. I mean, we're already seeing that, for example, in the pesticide industry, where states want to regulate pesticides different. And they're talking about, hey, can we say if, corn produced in Iowa doesn't have the same pesticide portfolio as we do here in California, we can stop import of those kinds of things. So it's a huge precedent. And I think farmers would look very favorably towards the House provision. Now, big question, I think, can we get that kind of a provision through the House floor? But at least it's in there as a starting point.
Yeah, why do you think it was left out? Because when Senator Bozeman was at a Farm Bill listening session that I moderated a couple weeks ago, he was adamant that it had to be in there.
Well, but on the Senate side, we have the same thing as the House side. We have on the House side Republican Chairman Thompson putting forward this bill. And even though there are Democratic provisions in there, Ranking Member David Scott hasn't been supportive. You go over to the Senate side and you have Democratic Chairman Debbie Stabenow, who has put forth ideas, but they weren't signed on to by the Republican Ranking Member John Bozeman. This is by far the most partisan start to a farm bill that we've ever seen. As you well know, farm bills have often been agriculture all melding together, and that doesn't mean you get every Republican and every Democrat on the committee supporting it, but you certainly get 2/3 of them, 3/4 of them that say, yeah, let's move this forward. And the fight is more on the House and Senate floor, where you get really, really conservative Republicans or really liberal Democrats that for one reason or the other say we can't support it. That doesn't look like that's going to be the case this time. I'm not going to get the number right, but it seems to me the last time we passed the Senate Farm Bill in 2018, it passed like 91-7. I mean, pretty overwhelming support. It's hard for me to see how do we get this Farm Bill to that point with that kind of bipartisanship.
Wow. So a couple of other things, differences that I saw there. House doubles FMD and MAP funding on export programs. I know that was something that especially soybean was pushing for.
Absolutely. I think almost every commodity group was saying, look, we're not getting new trade agreements with the Biden administration, and we didn't get them with the previous Trump administration. So I think farm groups in general are looking at it and saying, well, it sure looks like Mr. Trump or Mr. Biden will be our next president. It sure looks like they're not going to be for having new free trade agreements or multilateral agreements, et cetera. So we better continue to push for more free trade agreements, but we also ought to hedge our bets, and we ought to try to double this funding for things like MAP and FMD as a fallback position. So I think that's really key as we look at the next 4 years upcoming.
Yeah. And then crop insurance premium support is increased on the House side. That looks like that's pretty favorable as well. So
very, very favorable. Yep.
Yep. So I guess in sum total, do you think we're going to get the differences worked out in time to get the Farm Bill passed?
I'm afraid not. I mean, I hear a lot of people talking about, oh, we can do it in the lame duck Congress. But,
Wow.
You look at that. If we happen to get a Republican president, a Republican Senate, or Republican House, there's no incentive to move a farm bill. They would wait until they got in charge in January to do something. And the same thing if you had a Democratic president, House, Senate. So maybe if it's a mixture, but I think that's an iffy bet.
All right. Mayor Kay Thatcher joining us here on AgriTalk.
When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory.
And in for Chip Flory today, I'm Michelle Rook here on AgriTalk. Kurt Kovarik is back with us today, Vice President of Federal Affairs for Clean Fields Alliance America. And of course, we just got guidance a couple weeks ago from the Treasury Department on the 40B and the 45Z tax credits for sustainable aviation fuel under the Inflation Reduction Act. And Kurt, I know just last week, you guys already started to kind of nudge Treasury here that they need to get all that guidance out here for the 45Z clean fuels production credit as soon as possible, right?
Yeah, that's right, Michelle. Glad to be with you. And you're exactly right. What we saw a couple of weeks ago was guidance on what's called the 40B blender's tax credit for the blending of sustainable aviation fuel. That credit is only available for 2023 and 2024. So it's essentially, it's going to be expired here before many folks get an opportunity to use it. What's more important, and you alluded to it in the letter that we sent with about 25 other trade associations last week to Treasury, and that is on the importance of getting guidance and final guidance out on the 45Z clean fuel production credit. So this is a credit that's available for all fuels, not just aviation, but on-road, off-road, and aviation. And that's why we were joined by trade associations representing rail associations, trucking, aviation, all sectors, and commodities, as well as ethanol. All of these fuels have a stake in understanding how this tax credit's going to work beginning January 1st, 2025. But the reality is we need the guidance well before January 1st, 2025, so that the market has an opportunity to digest and understand how this will work. And because we're already purchasing feedstock and signing contracts for fuel very soon, that will be during 2025.
Yeah, so for farmers, they really need to know what climate smart ag practices will qualify under the GREET model under this 45Z tax credit guidance, right?
That's exactly right. So we got a little bit of a window into that with the final guidance on 40B. Some climate smart ag practices would get credit in terms of carbon reduction or reduced energy use. Those were a combination of no-till, cover crops, and fertilizer in the case of corn, but not soybeans. USDA has already signaled that they intend to include a much broader suite of climate smart ag practices. It can be kind of a la carte. We don't have to do all of them in order to get credit for some of them. So a much bigger, more flexible opportunity for farmers, we hope, we believe. But again, in order for that to work in practice, a farmer needs to know what the value is, what they're being rewarded for, because quite frankly, it's unreasonable to expect a farmer to take a risk in deploying some of these climate smart ag practices without having an understanding as to what the return might be for that feedstock if it goes into a biofuel.
Yeah, not only that, but as you get into planning already for this next crop, you have to know, are you going to need to use cover crops? Can you get the seed? I mean, there's a lot of moving parts, isn't there?
Absolutely. And farmers are, to some extent, kind of reluctant to deploy a new practice unless it's both proven and you're able to demonstrate that it's going to positively impact the financial standing of that farmer. Am I going to get more out of the crop if I invest in a cover crop or no-till or any other of a range of conservation practices, which is prudent. And that's why Secretary Vilsack has been very clear that he wants to make sustainability practices and conservation practices financially beneficial for the farmer, because it's not going to work otherwise. The farmer has to be rewarded for doing it. What I don't understand is this law was enacted in August of 2022, and here we are. We're going to come up on 2 years post enactment and still have very little guidance as to how this is going to work. And for an administration that really looks to this as their signature piece of climate legislation, it's hard to tell that based on the pace of implementation of some of the guidance in order for a taxpayer. Because quite frankly, at the end of the day, what they need is a program that works, it's understandable, and folks take advantage of it. Because if they don't take advantage of it, you're not going to get the fuel, and you're going to look in the rearview mirror a couple of years later and say, that signature piece of legislation really didn't achieve what we accomplished because the bureaucracy was so slow in implementing it and made it so convoluted that a farmer wouldn't even take advantage of it. So that's our message to the administration is, let's work together. Let's get this guidance out. Let's make it workable so that a farmer can be benefited from this, and the biofuels producer produces a fuel the administration wants.
Right. So something that kind of segues into what I'm going to talk about next, or ask you about next, is used cooking oil. Obviously, does qualify under the 40B tax credit guidance. 45Z, I would assume the same. But we are getting a lot of imports in from China. We chose not to put tariffs on that used cooking oil coming into the United States. Talk about how that's going to fit in going forward, and why were there no tariffs, or should there have been tariffs?
Sure. So I look at it this way. The biofuels industry was built by the agriculture and the soybean farmers throughout this country, primarily biodiesel and renewable diesel. But the fact of the matter is, as policies, whether they're at state levels or in corporate boardrooms, or now at the federal level with these tax incentives based on carbon intensity, they're all looking towards the lowest carbon feedstocks they can. And in the case of biodiesel and renewable diesel, our feedstocks are not only soy and canola oil, but waste animal fats. That's adding value to the farmer, to the livestock producer. Distiller's corn oil, which is a byproduct of the ethanol industry. And then, as you mentioned, used cooking oil. And all of those have a low CI score. What I would say is, we want to see the build out of the domestic industry, but what we need to do is make sure we're reducing carbon emissions from the supply chain of soybean and canola oil just as much as we are from all the other feedstocks.
All right. Thanks so much for joining us, Kurt. Kurt Kovarik with Clean Fuels Alliance America here on AgriTalk. Coming up this afternoon, we are going to have Chip Nellinger with Blue Reef Agri-Marketing joining us for AgriTalk PM. In for Chip Flory, I'm Michelle Rook. Join us back here at 2:06 today.
Windows down, country sound, FM on the radio.